Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer at First Source Bank. Joining me today is Erik Clapsaddle, our Senior Fixed Income Portfolio Manager. Erik, in the last few days we've got really great economic news related to gross domestic product. It came in at 4.9%, which is a very good number. The challenge is investors in the market seem pretty gloomy. Why might that be?
The most obvious answer has been inflation. It has remained stubbornly high, and every time we get a glimmer of hope that it might start to come down a little bit, economic data comes out to the contrary. Consumption and sales, retail sales continue to be at very high levels. The labor markets continue to be very tight. Job openings well exceed unemployed persons throughout the country. That is an abnormal thing for normal labor markets. And to Paul's earlier point, third quarter GDP this year was at its highest level since 2014, excluding the pandemic. Overall, we just need slowdown in demand in the US. And to use a sports analogy, which I swear I would never do, we believe we're on the back nine of this inflationary cycle. That started late 2020, early 2021. We've seen inflation go from 5.2% at the beginning of the year to 3.7% today, and we believe it's going to continue in that trajectory.
Clearly inflation is painful for the average consumer. We also know that there is a good chunk of the economy that is continuing to struggle, and that'd be manufacturing. Can you talk a little bit about that?
Sure. Yeah, manufacturing has been tough. It's incredibly important to the United States and the upper Midwest. Indiana is the #1 state in the US for manufacturing jobs per capita, and Michigan's #4. As you can see in the chart, the Institute for Supply Management has shown that the manufacturing sector has been in contraction territory since November 2022, an entire year. When the index rises above 50, it signals growth, and below 50, it signals contraction. Not to belabor the point on how important manufacturing is, but economic growth is dependent upon it. It creates middle-class jobs, and many studies show that it reduces poverty. More importantly, possibly most importantly, it's essential for national security, and it creates efficiencies and productivities throughout the economy.
Clearly manufacturing matters, and it really matters locally. So can you give our viewers some idea of what's going on a little closer to home?
Sure. As many know, the trajectory of sales and shipments of recreational vehicles tends to be a leading economic indicator, though probably not widely known outside of the upper Midwest. They are exposed to interest rates, heavily sensitive to rate increases, and to disposable income. You'll see in the chart that RV shipments have been down every single month this year on a year-over-year comparison to last year, and that's on the back of RV shipments being down 18% in 2022 relative to 2021, based on data from the RV Industry Association. To put it into context, how important manufacturing is in many communities around this country and metropolitan areas, thinking about the Elkhart Goshen area specifically, 50% of all jobs are in manufacturing, in comparison to that number being 8% nationwide.
Well, Erik, I clearly remember one of the first things I learned when I moved to South Bend and took on the role here at First Source was the RV industry leads us in and out of recession, and so it is clearly an indicator that we are following to see what the economy will do as we go forward. If you like today's video, we encourage you to share that with your friends and family. If you have not subscribed yet to the Market Share, we encourage you to do so at firstsource.com. And as always, thank you for the opportunity to serve you and your family, and have a great day.